Well, the Dow's down today, but no sense in crying about who you're sitting next to in the morning sales meeting. There's money to be made here, Lori.
I hope so. Yu-Dee Chang is the investment strategist, chief investment officer. He joins us now with some picks. Sorry for butchering the name of your firm there, Yu-Dee. It's great to have you back on the show. Curious what the message in the markets is here ahead of the State of the Union tonight. The Fed starting its two-day meeting. A little bit of concern, people a little cautious, thinking it's probably time to take some profit.
Yeah, absolutely. Lori, let me give you an interesting stat. Since 1920, so that's what, for the past 90 years, some point in time for the overall market, actually was lower than previous year's close. On the average, it was lower by about 9%. So we've had a really nice run up in the market since September already, right? So people are looking for excuses to take some profits off the table already. And today, at least, they found their excuses. Like you said, right in front of the State of the Union as well as the FOMC, people are being a little bit cautious today.
So what point in time do you recommend jumping back in? Maybe you've been waiting around a little bit. Maybe you don't want to chase the money up during this run that we've had since August. Are you looking for 5% pullback? You're looking for more like an 8% pullback, and then you tell your clients, yeah, get in now.
Yeah, you know what? Seriously, I think that's what most professionals are looking. If you think about the run-up in the market, it started since March of 2009. On the average, it pulls back about 4.5%. Maximally, it pulled back about 17%. That was during the May flash crash. So on the average, we think somewhere around 8%. Maybe it doesn't come right now. Maybe it comes in February, which historically is actually not a good month for the market. 8% or so, I will definitely be ready to jump back.
More short term, though, getting back to this theme with the State of the Union tonight and the fact that the key theme is the state of the deficit and spending and where to make those cuts. Do you think the market is a little bit more vulnerable given that?
Yeah, I think there's going to be some reactionary effect, of course, from the market. But all in all, basically, he's doing the right thing. He started to get a little bit, at least on the surface, pro-business, and that's what the market wants to see. So overall speaking, I really don't think the State of Union is going to have a long-lasting effect on the market. The market eventually is going to go back to the economy, it's going to go back to earnings, which actually, overall speaking, is still okay.
Yeah, let's look overseas. I think we're in the midst of a pretty good earnings season here in the States. We kind of know our economy is improving, albeit slowly. Housing and unemployment are two issues that are weighing on it. But are we putting the right amount of emphasis on what's going on in China and what's going on in Europe right now?
Well, these are two potential pitfalls, no doubt about it, right? One is China. Is China heating up too much? Are they going to overdo it by raising their interest rate and curbing the growth? And also in Europe, of course, they're coming up with a solution. The Germans actually being very responsible. So that's all good. But underneath, the European debt crisis is not exactly resolved yet. So I think we're pretty much going to see the same type of environment over the next 6 to 8 months as the one that we've had in the past 6 to 8 months. No doubt, the economy is growing, although without, like you said, without housing prices and without employment, nevertheless, the economy is growing. However, there's still some pitfall in the back of people's mind. Thus, we really believe in buying the dips, and you just can't chase the rally. Also, you have to rotate your money in and out of various sectors. You have to take profits on the sectors has had a run up, and you have to get into the sectors that is actually undervalued right now.
And can you give us an example of that here as we wrap up our time with you, Yu-Dee? What are some good plays right now?
Well, if you think about it, technology has been a great sector. However, it has had a huge run-up. So maybe it's not a bad idea to sort of take some profit off the table. If you look at it, banking actually has gotten hurt a little bit. Well, maybe that's a sector to get in. So I still like the banking sector, the energy sector, consumer discretionary, believe it or not. But of course, you have to pick the proper spot to get in. That's the way to be successful over this year.
Yu-Dee Chang, always a pleasure. Thanks for joining us today. Okay, still ahead here. Some are calling it the train to nowhere. One congressman going as far as calling it the